This is Jacob from Millennium Finance. Today I want to make a quick video on the top 10 biggest companies in the world by market cap. So here we got a chart on Yahoo Finance listing the top 10 biggest companies. So first, Microsoft, Apple, Amazon, Google, Facebook, Berkshire Hathaway, Visa, JP Morgan Chase Bank, Johnson & Johnson, and Walmart. So even in the top 10, if you look at the market cap difference between Walmart, 330 billion, to the biggest company, Microsoft, 1.4 trillion. So it's Microsoft and Apple are just massive companies. It's incredible how much they're worth. Next I want to show you guys a breakdown of the S&P 500 ETF. The biggest one is the SPY, or SPY, made by Spider Investments. And if you look at their allocations of how much of a percentage each one of these companies is within the S&P 500, it's crazy. So if you look at Microsoft off the bat, it's almost 5%. So let's say you're a passive investor and you put $100 into the market through an ETF. Most likely it's going to be S&P 500 because that's has the best record really compared to like the NASDAQ or NYSE. Most people invest in the S&P 500, right? Even over the S&P 100. So if you put $100 in, $5 is going into Microsoft stock, $5 is going to Apple stock, $3 is going to Amazon. The S&P 500 is supposed to be 500 different companies, but the top 10, they make up almost 25% of the market of the S&P 500. So these stocks have so much momentum now, just because their sheer size, and the trend in investing right now is mostly through ETFs. So when people invest in their 401ks, any kind of retirement funds, pension funds, whatever, a lot of that money goes into ETFs, and then a lot of the money from the ETFs is going to end up in these massive mega cap companies. So over time, they're really good investments just because of the passive money that's flowing into these stocks every single week or month or however often people contribute to their pension funds. A lot of that money is gonna continue to boost these stocks up. So they are great investments to invest in these mega caps. And then they're also great companies too. That's why they ended up being worth so much in the first place. Like if you look at these companies, most of them are kind of the way of the future, right? Like Microsoft, massive tech company, Apple, massive tech company, Amazon, that's how people are going to shop in the future. Facebook, they changed how people advertise, and they gave small business so much power to advertise. Berkshire, obviously the best investment firm in the world. They have the largest amount of capital invested. Google, of course, is just, everybody uses Google pretty much every day. JP Morgan, one of the biggest banks in the world. Johnson & Johnson, one of the biggest drug companies. Visa, anytime you use a credit card, you're giving them a little slice of cash, right? They just skim off the top. They take their 1%, 2%, whatever for the transaction fees. So they do a massive amount of business as well. I think most of these companies will, even in 50 years, they'll still be around. That's another reason why they're so valuable. Next, I want to do comparison between the S&P 500 and the QQQ, which is the NASDAQ 100. So yeah, obviously the SPY is the exact same as S&P 500. But if you compare it even to the NASDAQ, and the NASDAQ is has more medical and tech companies in it than the New York Stock Exchange. So if you look over the last 5 years, The Nasdaq has went up almost 100%, whereas the S&P 500 has only went up 60%. So just by investing in the tech companies, and it's really not even the last 5 years. It's really only since 2017. If you look at this is where the charts start to diverge, and the massive tech companies are the ones that are starting to lead the total market rally higher. Let's go to QQQ. So yeah, obviously QQQ is the Nasdaq 100. And look at this performance difference, even in the last 3 years. So 3 years ago, you go back, the blue line is the S&P 500, and these candlesticks are the Nasdaq. So you have almost 40% to 60%. So an extra 20% you would have made by just investing into the mega cap stocks that are mostly in Nasdaq and in the tech sector. So in the last 3 years, the trend has been, and it's not only in the stock market, it's also in the real economy too, where tech companies have become the dominant drivers of growth everywhere in the whole economy. For services, for cloud computing, what those massive tech companies do, they help every single business out there, all small businesses, medium, whatever. Their services can be used by pretty much everyone, even on a personal day-to-day scale. So it is I think this trend will keep continuing into the future, probably for the next 10, 20, maybe even 50 years, where the tech companies are the drivers of the economy, and therefore they're going to be the drivers of the stock market. So being invested in the big tech companies, obviously they're great investments, really, long term and short term. Okay, guys, that was all I really want to say.